Well, today we have a special guest joining us today, Christina Suter. We're going to be talking about how to find a financial advisor knowledgeable in the private equity real estate industry. Christina, I am so thankful to have you on the show. Christina, would you give the audience just a little bit of background about you and what you do?
Absolutely. And first, let me say thank you for having me on your show because, of course, that is first and foremost. I just so appreciate it. You and I have been trading back and forth. I've had you on my podcast. Now you invited me to your show. I just really love the sisterhood, right? The capacity to be able to support each other, people you feel like who are in your community that are valuable, that are making impact, that are standing for a greater cause or greater change and being able to highlight those people. And Whitney, I consider you to be one of those. And I so appreciate you including me in the work that you're doing and the impact you're trying to make and how we're really trying to empower people to find their financial leadership, right? Find their voice, find their sense of purpose in their lives and using finances not as a vehicle that is there at the effective, but the vehicle that they're in leadership of. They can make a change in their lives through the financial choices that they make to have the life that they're looking for and they dream for. So that is, I honor and respect that in you and that you're a stand for that as well. So I just wanted to say that first.
Well, thank you. Yes, and that's what we strive to do here at Passive Investing Made Simple is to, like what you just said, is just to help people, one, fully understand what this, all the myriad of ways that they can impact their own personal finance, but also invest at a higher level. And then, but knowledge is just one part. It's like taking, and you and I talked about this last week at an investor con.
Yes.
In Austin, Texas, like how can you take this knowledge and put it into power, put it into action? And so I know you and I are both about let's make things simple, straightforward, and now let's show you how to put it into action. And so I'm super thankful for today's conversation because one of the questions I get so often from investors, especially newer investors into the space, they're like, okay, passive investing in real estate. Like, why hasn't my registered, investment advisor told me about this? Like, is it even legit? That's like one of the first questions I get.
Let me
So
let me answer let me ask you the first question, then I'll answer the second question because I didn't even answer your first question. So your first question is who the heck is this Christina Suter chick and why is she here on this show? Like, what's the crazy lady about? Okay. So first and foremost, Christina Suter, I am ChristinaSuter.com. I am a real estate investment advisor. I work specific and a registered investment advisor as well. I work specifically with mid and high level investors and helping them craft and develop a portfolio that is based on them fulfilling their purpose in their life so that real estate and their investment portfolio serves them. I also then help quarterback their team to help them develop their team and the financial leadership necessary in order to have that long-term success based on the strategic plan that we create together. So that's what I do, right? I am also a real estate investor. I have been investing in real estate since I was for 35 years, since I was 17 years old, and it was completely happenstantial. Just so people understand, how did I start at 17? Because that's often a question I get. My mom, who had asthma, and I don't know if anybody remembers third-degree smog alerts, right? To third-degree smog alerts in LA in the San Gabriel Valley, and my mom's asthma was bad enough that she went, I have to leave. I'm leaving. She made the choice. I am moving to Northern California. We have the family house that I grew up in, that my sister and brother grew up in. Who is going to take it over? Right. So I love that. I'm sorry. There's a great question in the chat. I just have to talk to it. Mid and high level investors. Does that mean short investors are not allowed? Yes, short investors are allowed. 5 feet or shorter, you are still absolutely included completely in being able to work with me. I do not mean to be I'm not meaning to I do not avoid working with those who are height challenged in any way, shape, or form. Okay, don't get me off on a topic. I will be completely irreverent just too long about this. And I know you were kidding, but I love jokes, so forgive me for jumping on that. All right. So getting back to my little spiel. So I was 17 years old. My mom made the phone call to the other siblings and then to me. And I said, yeah, of course. You need to leave town, Mom. I'm happy. I'll watch the house. That's what I thought I was agreeing to. And then later she's like, no, you're taking the house. Here's the deed. We're going to an escrow office. We're signing paperwork. It's yours. And I'm like, I'm 17 and in college, a freshman. I have no idea what you're asking me to do. And that was my beginning of investing in real estate. Since then, in my portfolio, I have had single doors, fourplexes, multifamilies, in-state, out-of-state, condo conversion, lot splits, flipping 2 different times in my life, both locally and at a distance. Although I'd say at a distance wasn't as good as local, but local's complex all by itself. Condo tells. I have a variety of different partnerships that I have been involved in. And I lived through both the dot-com bust with my stock portfolio, and I have lived through the Great Recession with my real estate portfolio. So I am a great believer of what it means to be an investor across topics, across assets, and not just in real estate. That being said, real estate is still my first love and the first thing that I advise my clients on in encouraging them to create a strategic plan around the asset of real estate.
Awesome. Well, thank you so much for sharing that. Now,
Yes.
I want to kind of tap into, like, bring us back to the topic at hand today, because, again, in those early conversations with some of my investors, here at passiveinvesting.com, they're trying to like scratch their head, and we're like, if this investment passively into passive real estate is such a thing, why doesn't my real estate investment advisor or resident,
My investment advisor not suggest real estate.
exactly. But let's first understand the difference between an RIA and somebody who's like you, that is more of a financial, advisor that is real estate savvy. Like, what's the difference here between the two?
There's a distinct difference, and it's part of your previous question, which I'm tracking. I haven't answered that question. Part of why most registered investment advisors, which I am a licensed RIA in the state of California, but I started as a real estate investment advisor. Why? What is the difference? To answer your question directly. A real estate investment advisor, there are only a few of us, and we basically started in real estate. We have our financial background in real estate. We are active investors in our history. We have participated with real estate either through direct ownership or through being limited partners in syndication deals as passive investors. But we have stewarded an investment portfolio of our own or have deeply educated ourselves in the asset class of real estate, whether that's direct ownership or assets that are backed by real estate. So that's what that half means. Now, that also means that there are registered investment advisors. They often, by the state of California and even by the SEC, are required to pass through coursework and understanding in what it means to manage securities. And securities is a very specific definition that has to do with whether or not it is something that can be bought and sold as a piece of a larger company. That's the best description and simplest description of securities I can offer. It's not the SEC's description, but I think it's easy enough for people to approach that, right? So that becomes a security, and you need to be licensed to buy and sell securities, whether you're an investment advisor or you're a broker. A broker has the direct license to be able to buy and sell that security. An advisor like me is licensed to advise on the buying and selling of securities, and I'm allowed to have assets under management, as in I can do it for my clients. I can have the asset and do it for them. Registered investment advisors are usually brought up through the traditional financial channels. They have a bachelor's in business, or they have a bachelor's in finance, they have a master's in business, or they have a master's in finance. They have taken the coursework. They have been licensed based on the SEC requirements, which is the Securities and Exchange Commission, which oversees the stock market. And therefore, all the education and background is primarily in that area of stocks and bonds and the securities area. They often are not educated once they've passed through that channel in real estate as an alternative. They call it an alternative investment vehicle. I don't agree with them because I started as a professional, personally in my own investment career in real estate. I like real estate. I like the variability of real estate in that it keeps me out of the securities. I like that it is less sensitive to pure fluctuations in the economy itself because it is a commodity and therefore it continues to hold a value. I can't tell you how many times I've heard people say, if you put up a dartboard with all the companies that were on the S&P 500 50 years ago, you'll find that many of them don't exist anymore. Right? Whereas if you look at a piece of real estate, it does physically exist. There are advantages and disadvantages to each one. Let's be very clear. Like I said, I advise specifically on real estate, but I hold stocks and securities in my own portfolio. So I would be a hypocrite to say you shouldn't invest in them. But at the same time, why does your advisor, that is a registered investment advisor, not suggest them? They are not licensed for that. They are not knowledgeable in that. They do not understand how it works as a balancing asset inside of a portfolio. They cannot recommend something they're not educated in. And they should not recommend something they're not educated in. But should they be willing to, at least be open to it, maybe advise you to have a diversified portfolio? In my opinion, yeah, of course they should, right? My own investment portfolio has stocks, has bonds, has LPs, has hard money loans in it, has direct ownership of assets in real estate. I am an investor across the different assets that I can be able to get control over because there are different elements that affect each one at different times. Okay.
Okay, that's so
Passionate
amazing
about that
because
or not?
so just to kind of bring it, put a pretty bow on it, like
Go for it.
a traditional RIA who has not had that background and experience in real estate, they're just their education and their licensure requirement doesn't require them to be knowledgeable of real estate. Now, if they're taking a holistic view of crafting a portfolio, real estate probably has a position in there. So that kind of leads to my next question. With RIAs, how many people actually, how many RIAs like actually take it upon themselves to become knowledgeable in real estate? Let me ask it that way.
Very few, because it's not part of their history. It's not part of their background. It's definitely not part of their licensure. They don't. I would say, I'll just give an example. When I was 17 years old and my mom is having this conversation with me, right? I talked with a financial advisor and he very carefully explained to me, as a young woman at 17, first entering the investor field, he very carefully explained to me that real estate is not an investment asset.
Oh,
Right? This was, wait a minute.
whoa. Tell
This
me
was
more.
35 years ago. Okay. So this is like ancient history. Okay. I'm an old chick, right? Blue hair, but I'm an old chick. Okay. 35 years ago, he's explained to me that you want to own real estate as your primary residence. That is valuable to you because you're getting an alternative use out of real estate, which is the value as a primary residence. It is not a good investment vehicle. Now, obviously, I didn't agree with him, right? I took my mom's home and I rented it out to my godparents and I got cash flow from it. I bought a condo for my brother and I rented it out Section 8 and I got cash flow from it. And I bought another house for my mom to live in and she paid the mortgage and the rent. And I'm like, oh my gosh, the asset is growing. So I had a personal world experience that proved to me the deep value of real estate as a growing commodity-based asset that actually lends stability in downturns and lends long-term value, much in the same way that a stock and bond portfolio can lend long-term value. But this is literally a physical asset that I can always retreat to, that is always needed because I primarily invest in versions of residential, single family, multifamily, hard money loans against residential, flipping, which is again in the residential area, whether it's single family or multifamily, flipping, condo hotels, all of that has been my stomping ground, right?
Now I'm going to take a hard left-hand turn, and then I'll bring us back to that
Hope I answered that question sufficiently, which is they don't have background in it, right?
yeah.
And they're therefore against it because the field itself has educated the people that they educate, literally have been told real estate is not a valuable investment asset. I haven't had real world experience as I was getting my bachelor's degree in business. I had real world experience that counterbalanced that. And I knew that that was just inaccurate. Okay, go ahead.
Well, okay, I'm going to take a left-hand turn, dive down a little bit of a rabbit hole because you've now said the word 3 times in our conversation, commodity. And we've never really tied that together. I understand what you're talking about, but for people here, when they think about commodities, they think about gold, they think about agriculture. Why do you classify real estate as a commodity?
Gold, agriculture, pork bellies, right? We've all heard
Yeah,
about
right.
this is a commodity, right, for a long period of time, right? Oil is a commodity, right? So, and some might even consider, yeah, well, agriculture, I was going to say corn, right? Corn is actually a usable commodity as well. The concept of commodities, I would say, is that it's a hard asset, a visibly hard asset, something in which you can say exists regardless of whether they're, regardless of its state, regardless of its ownership. I'm trying to make commodities as simple a definition as possible. And if you have a better definition, I'd love to hear you jump into that. But basically, it continues to exist regardless of form and shape of ownership. And it also is something that, in theory, has value almost regardless of economic position, economic state in the market. People need to eat. They're going to want pork bellies. People need corn because they need to eat. People are going to value gold because it's a hard asset, quote unquote, commodity. And commodities, in theory, are counter-cyclical. Most commodities we're familiar with the concept of counter-cyclical. Real estate is not actually counter-cyclical, just to be clear. For those of you who are familiar with cycles in the market and being able to use commodities to counterbalance a portfolio, real estate is not actually countercyclical. It actually is very much cyclical with the economy as a whole, but it is a commodity in that it continues to exist. People continue to need housing, and until that house is physically, oh, and orange juice too. AP, I love you. I love the sense of humor. Okay, this is perfect. But yeah, it continues to exist regardless of the state of its ownership. And so that's how it is a commodity, and therefore it still exists 50 years later, even though it might be depreciated or it might be have a lot of deferred maintenance, it still physically exists and therefore is a commodity.
I love that definition of that. And I think the definition that I grew up with, and
Tell me. Yeah.
mind you, this is my grandfather trying to help me understand, real estate. And he was like, it has wood, it has metal in it. And all those things are commodities. And you just happen to rearrange the wood and the metal and you put it together in a structure that's going to last. And it serves a use. Everybody needs a roof over their head. And
Mhm.
so, this is
Love
coming
it.
from a cattle farmer. So he thought the world in commodities. So that
But
was his whole language there.
this,
Um,
go ahead, honey.
yeah, well, anyways, like I said, I wanted to take a little bit of a left-hand turn there because, you mentioned the word commodity 3 times, and I don't think we've ever fully helped, our investors here on the show understand that we always say real estate is an alternative asset class, but it is. It does fall kind of more it can be classified as a commodity as well. Now, I want to kind of bring us back to the subject at hand, right? We've, understood the difference between, your real estate investment advisor and a traditional RIA.
Mhm.
Help us and you help to kind of elucidate the challenges of why it's hard to find an IRA. And that's for me growing up, like
That
it was go to
uses,
school.
yeah, diverse across both, multiple sets of asset classes. Go ahead.
Yeah, but I mean, like I was go to school, get a good job, invest in your retirement account, abdicate responsibility to a financial advisor, particularly IRA if I can,
Mhm.
and then they know better than I do.
Mhm.
How to invest my funds. But, for somebody who's like grown up in that narrative, that's what they know, but they want to get into private equity real estate and they're not ready to let go of the advisor quite yet, or they're seeking an advisor to better help them understand the allocation in their portfolio across the different asset classes. How can you help the audience here find somebody like you, a financial advisor that, that has experience both in the publicly traded assets, but also in more alternative assets like real estate?
Okay. Let me answer that question and define some things at the same time, if I may. So you will find inside of one, it's opening up, the field is opening up more, right? When I was a young investor, I bought my first stock at 12, it was Wrigley's Gum, right? My mom laid me down and said, "Do you see these little tiny symbols on the page? Those are stocks. And that one's Wrigley's Gum. You chew that. And that one's Federal Express. That's the guy who drops off packages at our house." Right. And so I started that at 12, right? Okay. So I started there. God bless my mother, like literally, God bless my mother, right? She was the backbone of my first financial education. In the day when I was 17, financial advisors specifically did not consider real estate to be a valuable alternative asset and to be part of a portfolio. They considered it bothersome and that it took a lot of time to manage real estate. And they thought the only way they understood real estate investing was through two vehicles, either direct ownership, which they didn't want to be bogged down into because it took time and effort to manage tenants, to manage the property tax and the insurance, and they charged a fee for that, anywhere from 1 to 2% of the total value of the asset per year, which they would do of the total asset of your stock and bond portfolio, right? But when your real estate is owned in Southern California and it's worth $1 million plus and you're not earning that same return on it, that seems like a hefty fee, right? So or the other way they need to invest in real estate was through the stock exchange. There are real estate based stocks that are specifically inside of real estate companies like BlackRock, where you're capable of actually buying a piece of a company that specializes in real estate. So today, that's the distinction. Now today, most investment advisor, registered investment advisors or investment advisement companies will absolutely invest in alternatives like a stock in a BlackRock, and that will be considered one of the industries that they will invest in, like the tech, like the finance industry, like the emerging markets. They now have real estate as a piece inside of a weighted portfolio. Now, but that doesn't mean they're doing what I'm doing, which is allowing for notes and direct ownership, right, of real estate as an asset itself, and actually diversifying that inside of their portfolio. The closest I've ever seen, and this is what you would ask people if you're looking to invest, looking to look that up, here's what you put into Google. Registered investment advisor, real estate. Because what they're doing now is that they have an advisor who is primarily the name of the company, which is part of the history of the company. And then they have a secondary advisor that specializes in real estate, primarily in LP investments. Right. So I know of a house right here in Pasadena that's what Vic Bailey, who is the sub partner that specifically takes the asset class, the portfolio, and will take a portion of it and invest it specifically in things like Shop Off and Michael Blanc's holdings and Fortune Builder holdings, people that are offering LP positions as a way of investing in real estate as an alternative asset with a percentage of ownership that is not a stock that is being traded as a security on the stock exchange. So primarily,
like us here at passiveinvesting.com too.
Well, there you go. See, passive investing, like you guys find at passiveinvesting.com. You are exactly the type of company that this registered investment advisor would continue to develop a relationship with, like Shop Off, like passiveinvesting.com, where they intentionally roll in an LP. And it's very easy for a traditional advisor to see the value of that because it looks and works a lot like a bond. It's a debt instrument. LPs can be considered a version of, even though it can be an equity position, it can be a debt position, but the way it operates as far as their management of it is incredibly similar to a bond and a debt instrument. So if you're looking to get your financial advisor to open their mind up, that is how you present to them that getting an LP position is similar to, on their side, maintaining like a debt instrument, even if it's an equity position inside of the actual fund itself. Right?
Awesome. So what are some of the questions somebody would ask this, potential, registered investment advisor that specializes in real estate? Like, how do they know they got a good person to work with?
All right. So we go through Google. Here's my system always for everything. Anytime I'm finding anything, here's how I do it. I go to Google and I type in what I'm looking for. Registered investment advisor, real estate. And you're going to see some that show up that say, yes, we do some version of real estate. Yes, we invest in the sector of real estate, which means they buy stocks in the sector of real estate. And then you have the phone call with a minimum of 3 of them. And you ask directly the question, which is, I know you invest in stocks and bonds. I understand that you probably invest in stocks inside of the real estate field. REITs is what their terminology is, which might be a BlackRock. Do you also have anybody in your facility or that you have a relationship with that invests in the alternative of real estate from a LP or limited partner position? Do you have anybody that would support direct ownership? Most will say no to direct ownership. There are more and more that will say yes to allowing you to invest as in an alternative as a limited partner inside of a fund like passiveinvesting.com. Right?
Awesome. Very
Passive
simple.
investing, like
4
you guys.
questions.
Right? Very simple. And you just find out if they're willing to do it or not. And honestly, I would say I haven't done an actual review of the industry currently. There was a time when I would say it was 1 out of 50 that would understand that back when I was 17, based on the advisor I had. But also, I would say I'm running into more and more houses that are like that. Even family offices seem to be very much in that area, because surprising to me when I saw the data, even though I've been an real estate investment advisor for 15, 16 years now. It's 2024. I started in 2007. But I got my registered investment advisor a year and a half ago so that I could be in that field. So the family office, somebody mentioned to me that they believe that the statistic is anywhere from 60 to 70% of the assets inside of a family office are real estate or real estate backed. And that there's an unusually large amount of people in the family office space that participate in real estate and participate in the LP position or in the direct position. So family offices are great, but generally family offices, even multifamily offices, want you to have a certain amount of net worth. They either want you to be mid or super tall, right? They're
Thinking of you, AP.
there you go, AP. I'm with you, babe. They could be like, but basically, mid to high level net worth people can thank you, AP. These mid to high level net worth people can start developing relationships with family offices, and you're more likely to reach a successful conclusion or find somebody successfully that is inside of the real estate backed market or real estate backed assets inside the family office space, and not really inside of Bank of America or Chase. They have not caught up on this particular trend. So if you're with a Chase, I even know Bank of America, Chase, Northern Trust. I'm trying to think about investment houses I've interacted with recently, Merrill Lynch and Schwab. All five do not currently take LP positions or direct ownership. But I do know family offices, including Legacy, the Legacy family office, that does intentionally and consciously take the family office assets and put them into LP positions and even some direct ownership. So if you have enough money to go with a small multi-family office, I would encourage you to do so. You get a lot more say and a lot more diversification across your assets. So that's your little kernel there.
I appreciate that. Now, as we wrap up, we're going to open up our Ask Me Anything part of the
Okay,
show.
good.
So nobody go
I'm going to ask
anywhere.
you a question. I'm going to ask you a question. So everybody stay, because I got a question for Whitney on that one.
Oh, okay. Well, no, I'm going to ask my question first.
Yes, you can ask your question first. I'm just saying stay for the Q&A.
Yeah, absolutely. Okay. So, you're advising somebody, and is there a typical portfolio balance that you suggest somebody hold between stocks, bonds, mutual funds, direct ownership, LP positions? Like, is there kind of a magical one size fits all solution? And I'm not trying to bait you on that. I'm
No,
actually like,
it's one of my favorite
kind of a
questions.
balance there?
One of my
Yeah.
favorite questions. It's one of my favorite questions. So here's what I try to do. I have the family or the individual and their needs. Now, I started with what does it mean to live a life of purpose and trying to make the planet better? And I don't just mean like impact investing. I mean truly financial leadership in your life so that you can choose to be either the primary breadwinner for your family or even create an estate that gets left ongoingly to your children. I have a whole life insurance policy on me. I have an insurance policy on my daughter. I have that insurance policy on my daughter so that the future generational wealth can continue to transfer forward. It's a legacy move. So you have your life, your purpose, what you believe you're put on the planet for. And then I want to work with you on crafting a portfolio that fulfills that moves that forward. That ultimately is the guiding light for any investment portfolio. And here's why I can say that so confidently. I've been advising since 2007. And what I have discovered is no matter how much I think this is a great position for them, and I think this is great, they're going to do what their risk tolerance and what their passion and purpose wants them to do. So why not honor both that I believe this is the way life should be lived, is that you create passion and purpose through financial leadership. Why not honor that as a value of my own, but also notice that's what's happening anyways. So therefore, I take my experience And I create a strategic plan that specifically takes my experience in how to create diversification inside your portfolio to allow for your goals, growth, stocks, you're 23, you're 58, what are your needs, what are your desires? And I merge those specifically in a very specialized and individualized strategic plan that has to do with this is your allotment schedule. And this is what we're investing in. We're going to take a third and we're going to invest in that. We're going to take a third and we're going to invest in that. We're going to take a third and we're going to invest in that. And I like using thirds, right? So it might be a third in stocks, it might be a third in LP position, it might be a third in direct ownership if you want to be heavily weighted in real estate. It might be a third in stocks, it might be a third in notes or in REITs, and it might be a third in LP positions if you want to be more passive. So we really need to develop a portfolio that hits your earning goals and your cash flow requirements, that fulfills and supports your financial leadership and life purpose.
I love it. I love it. Now, I want to make sure we leave plenty of time for our Ask Me Anything session. So, Christina, if people want to learn more about you and follow you, how can they do so?
Very simple. ChristinaSuter.com is my website. There's also How to Live a Rich Life. It has to do with my my one-on-one mentorship program. I also teach my coursework through itieducation.org. That's where I teach. I also have Instagram and Facebook, and I encourage and LinkedIn. And I encourage you to follow me on whatever is your favorite platform, because one of the things I try very hard to do is to educate. My reels are focused on educating, whether it has to do with fulfilling your purpose in life or it has to do with gaining further financial knowledge and financial leadership inside the field of real estate specifically, or the economy, because all the assets rise and fall on a bigger ship called the economy, whether it's real estate or stocks and bonds. So therefore, those are my passions, and that's what I educate on. So I encourage you to follow me just so I can hopefully educate you, just for the sheer purpose of educating, because that's part of my life's purpose, is transformation, abundance, and freedom for myself and for others. Transformation occurs through education, occurs through one-on-one mentoring, which is what I do, and occurs through me teaching and hosting my meetings. So that's why I do what I do.
Love it. And that's why we're such kindred spirits, because we
That's
love
right.
educating
That's
people.
exactly.
Guys, if you're here live, don't go anywhere. We're about to start our Ask Me Anything session.
Question you should restate your question.
I don't remember what my question
So
was.
basically your question was really about, Christina, how do you bring on a new client? How do you create this idealized strategic plan for them that is truly personalized for every client? Because I like I said, I've been in investing in stocks for a long time. I started at 12 with myself, and then I got some inheritance at 17, which was in stocks. And then I also, well, it wasn't 17, it was older. It's when my grandmother passed. But I also got this house. So I've had this like financial background from my mother. And she was an entrepreneur and a small business owner. And so she was very invested in her and my sister and I getting this financial background. Okay. So what I have noticed from the years of investing and from my own investment portfolio is that we're going to invest based upon our risk tolerance and our goals of the vision in our head, period. That is always first. So what I do when I first bring a client on is I ask, where are you starting? Where do you want to go? Now, how do you want to get there? So where you want to go is one of our goals, is one of our targets. Oh, I see myself owning a passive real estate portfolio with tons of multifamily. Okay, cool. No, I see myself owning, C-grade retail strip malls. Okay, we can do that too. No, I really want to be completely passive. I want to travel in my older years. I'm like, okay, we can do that too. You see how the end goal helps to define what we're investing towards, but we're not done yet. We also want to talk about how you want to get there. Okay, you want to keep your job, you don't want to keep your job. You have stepping stones that you want to do in leaving your job. Okay, you want to leave your job in 5 years. We'll plan for that. Then you want to spend the next 10 years continuing to develop your portfolio. Let's plan on that and what that should look like. Then you want to spend the best 10 years traveling the world, being able to see all those places you didn't want to see. Let's develop that. So we're actively developing a portfolio that not only is diversified across sectors, but is actually hitting benchmarks inside of the financial plan. I got married. All of a sudden I have a kid. Guess what? I don't want to travel with my last, these last 10 years. Great. Let's redevelop the strategic plan specifically to fulfill what you feel like your life's purpose is about, because those life's purposes give us the goal. Now, once we have that's where you're going, we develop an earning goal, and it's very specific. I want to earn 12% a year upon year in the first 5 years. And then in the next 10 years, I want to earn 16%. And then when I want to get into the push button and play period because I want to travel, well, then I want to earn 8%. And it's like, great, there are certain asset classes and diversifications that line up with each one of those goals. Now you see how I can take a blend of what their values are, what their vision is, and what investments offer. Real estate, debt, which might be hard money lending, might be bonds, stocks and equity. And I had somebody ask about crypto, and we bleed those together truly into a personalized program that is about you hitting your goals in your life, which I don't know a lot of registered investment advisors that truly want to personalize the investment plan beyond 3 basic categories: high income, high appreciation, or blended.
Mhm.
Okay.
So
All right. That was my rant.
no, I love it. So, when we have the question on the table though, is like, what are your impressions around crypto? Is it truly investing?
Wow, that's a big question. Is it truly investing? Love the challenge of the question. Beautiful. So I think cryptocurrency is something that I am hesitant about. I'll say that up front because I want to see it stay as an investment vehicle. So I put crypto in the box of being high risk. Does that mean you don't invest in it? Absolutely. I invest in direct ownership. I flipped my own houses. I've done my own condo conversion. Of course, I've done high risk investing. So I'm not against high risk investing, but I encourage it to be placed against a portfolio that's balanced, that meets all the goals, not a goal, right? Crypto is not a cash flow. It doesn't hit cash flow goals. It is an appreciating asset. That's what it does, is it appreciates. So therefore it has a box that it fits in, which is appreciation, and it should be inside of the high risk percentage of the portfolio. If you're 32, your high risk tolerance might be bigger than if you're 72. And I'm like, you say you want to have cash flow for retirement and elder care. I'm like, well, crypto needs to be a smaller percentage because it doesn't behave as a ongoing, consistent asset protection or equity protection asset that allows for cash flow. But over here, it allows for higher risk and higher growth. Doesn't mean it can't be in your portfolio, but it serves its purpose. Every dollar has a job. We've defined what the jobs are, and now we assign the dollars to those jobs. And if your job is to have higher risk returns and crypto is your passion, yeah, we're going to include it. Am I an expert in crypto? No, I'm not. Do we need to bring an expert in crypto on to advise you? Potentially.
Mhm. And that kind of really dovetails, especially said, give every dollar a job. Like whenever you're investing, we often, talk about the 7 pillars of building wealth. So I'm all the time trying to help people understand, like, let's give that one investment as many jobs as possible. Can we give it capital preservation? Can we give it cash flow? Can we give it equity growth, tax benefits? Are we using leverage? Right?
Mhm.
Like, how many, that's how I think about when you say giving a dollar a job. Like, I'm trying to give that investment as many jobs. And yeah, crypto, it it hits maybe capital preservation, maybe, because like if you never sell it, as long as it keeps going up and to the right, like you preserve capital, right? If you can
Okay.
weather the volatility, right? It's kind of like a stock. If you can like never sell it, you didn't lose a share, right? It's
Right.
never taken from you. Right now, we're going to leave that, we're going to put that down. But it is high growth, right? There's the potential there.
High
You
growth.
can't cash flow it. You don't get the tax benefits from it.
Right.
We already seen what happens whenever you take out leverage on that. Governments are shutting that down left and right.
Yes.
So
Well, and governments are what's surprising to me was as of 2 years, governments were starting to embrace it more, right? There are certain countries that have taken crypto on as a form of currency that the government itself is willing to participate in. And
but
I
it was
wish,
like Panama that did.
yes, it was Panama. It was another P country, I think, as well. But
Okay.
yes, Panama was one of the countries, and I don't remember the list. I apologize. I'm not a crypto expert, but
Mhm.
I watch crypto like any emerging style of asset class. I'm watching to see how it grows into its out of its infancy into its teenhood. And if it's going to be embraced by countries and it's going to be traded by banks, that gives it more concreteness as an asset class that is going to stay. Right now, will it continue to stay for forever and be integrated into our financial system? Don't know. I reserve the right to update my opinion every 6 months. As I do on any regional market, I reserve my right to update my opinion every 6 months. As of right now, it seems to be gaining traction and not losing traction when I look at it as a style of an investment asset. Does it make sense? So that's how I approach crypto. Isn't that question about, oh, it's not real money and it only exists on servers, so therefore it's going to die. The gold bugs go, hey, you know what? Gold is physical. It's going to be around forever. And I'm like, have you actually watched the gold market? Have you noticed how volatile gold is? I am sorry, but gold is not the treasured asset that is always, sorry, if I'm pissing off some gold bugs, I apologize. It is not the treasured asset that always is the same and therefore is a true preservation of wealth, because it goes up and it goes down just as real estate does, just as stocks does, just as bond does. It is countercyclical and it goes up and down countercyclical. So it serves a purpose inside of a portfolio, but it itself by itself is not an inherent preservation of wealth and therefore is always worth the same value. So I just want to put that out there. So I am not, clearly not a gold bug, but I'm also not a crypto. I'm in, there's a job and there are different needs inside a portfolio. And what is going to serve that as an investment vehicle? And we have a handful of investment vehicles we can play this game in. And crypto is slowly showing itself to go from infancy to maybe teenagerhood. And therefore, I still mark it as a high risk asset that belongs inside a portion of the portfolio if the investor is interested in it because they have found it valuable. And it is a volatile asset based upon its curves. And we're going to treat it based on that. Does that make sense?
Yeah, definitely. And I think that leads us into our next question.
Go
Is
ahead.
what, because we've got a couple more questions and just a
Okay,
little
I
bit
got
of
more
time
questions.
here.
Okay.
What has been your
I was gonna
best
say-
investment?
Go ahead.
What has been your best investment in terms of the return you have received?
Real estate. Real estate.
Ding, done.
Yeah, sorry. I invested in a small house in Healdsburg, California before Healdsburg got discovered, and it tripled in value in about 10 years. I put in 350,000 and it was worth over $1 million. It was $1.2 million when I sold it. So more than tripled, and that is one of my biggest cash flows. The next is when I've been able to take a single family and I can rehab it, and I can take it from bought it for 750,000 and I sold it for 1.8 million. So there's no question to me that real estate is my passion. It's offered me the best returns, and I have the most control over making those returns happen. Because even though real estate rises and falls with the economy as a whole, I have choice over what I'm choosing to do with it and how I'm going to make that particular asset move. I don't have choice when it comes to Coca-Cola, right? So Coke and a fund are similar to me. I am not at choice. I don't have control. Direct ownership or being able to engage with an asset like real estate, I have control and I can force value out of it. I can't force out of a stock, at least because I'm not a day trader and I don't do options and margins, right? So I'm just saying, real estate.
And that, and you know, I want to kind of put like a little bit of asterisk on there, and not asterisk on the amazing returns you've gotten, because I've had similar amazing returns with direct ownership of real estate. However, if you have a higher, this is my opinion, I'd love to get your thoughts on this.
Let's hear it. Let's hear it. I want to hear
Is if you have a higher and better use in your time as like a doctor, a lawyer, engineer, tech worker, business owner, should you go out and buy real estate and try to flip it and own it?
Nope.
It,
Nope.
oh, thank you. That's what
Nope.
I would say.
So let's talk about again passive investing. So passiveinvesting.com, you guys offer a specific to me style of asset, right? It happens to be backed primarily in residential, right? Almost everything you guys do is in that space. Is that correct?
Yes.
Okay, perfect. So, and you guys take LP limited partner investors. You guys are the experts in the field. Your job is to get that dollar they've given you to work in an area where you guys have the time and the expertise to get that dollar to be worth more in the future by applying it to an asset class called residential and multifamily, right?
And self-storage and cars. We
And
do a lot.
okay, and self-storage and cars. That's why I asked, what do you guys invest in, right? I, as a doctor, I, as a mom, my portfolio, I converted it almost completely to passive when my daughter was born, because I didn't want to have direct ownership. I didn't want to be involved in that amount of time and effort. Right. The LP investment holds a specific purpose inside of a portfolio. And I love having that inside of a portfolio, whether you have the time or not, because it brings cash. It diversifies you outside of your own investment pool, which I want to have other experts on my team making the dollar work. It allows you to be passive. It gives you targeted returns that often will give you cash flow and appreciation. And I love that process of just going, look, I'm going to take this portion and I move it away from myself, away from my effort and my focus, and be able to allow a true expert in that area, which I am not, to make it return higher than I possibly could in that area. That's intentional, and it serves, especially if you're a doctor and your entire portfolio needs to be passive. You need to be engaged as an LP, not just in stocks, but in order to get diversification in real estate, you need to take the LP position as a form of diversifying and protecting your portfolio.
I
Is
love
that
it.
very clear?
Yes.
Good.
Yes. Question here, is there a net worth minimum to work with you?
Is there a net worth minimum? No, there's no net worth minimum to work with me in my consulting work. There is a net worth minimum if you want to be under the registered investment advisor arm. That's 2 million. But if you want to work with me, you call me. I have many times I have a phone call with people. My purpose of the phone call is to see where the win-win is. Based upon the size of your portfolio and the complexity of what you're facing, I will let you know if it's 1 session, 6 sessions, 12 sessions. I have a 3-month program, I have a 6-month program, and I have the one-time good time. Give me a phone call. Let's talk about it. And if your portfolio doesn't have enough complexity in it yet, but you want to know where the heck you're going, because that's often the question. Like, I just had a phone call yesterday with this great guy who's like, I got a girlfriend and we want to do this and we want to do a primary residence, but I got one house in Dayton, Ohio, and I've got, this much net worth. And I'm like, dude, let me download to you what your plan is. And you're going to come back to me in about 5 years when you're done implementing the first part of the plan I just gave you. Okay. Because that's when you're going to have enough complexity in your portfolio that us meeting for a 3-month period now makes sense.
Awesome.
I
Now,
love those phone calls.
yeah, Christina, and I'm going to open up a bit of a can of worms, but guys, if you have questions, drop them in here. And not bad, not bad. I just remember being on stage back in, was it early 2022 together? You were moderating a panel that I was on.
Yes.
And there was a question asked about cash flow life insurance that got asked to the panelists. And you said at that point in time, I love cash flow insurance because, and this quote just has always stuck with me, is because it protects me against being an idiot investor. Essentially, that's how I heard it.
It's my idiot policy. I call it my idiot policy, straight up. My life investments is my whole life investment is my idiot policy.
So what did you mean by that? How does that mean? Because we kind of have this conversation every now and then. I bring somebody that's versed in cash flow life insurance onto the show. And, conceptually, people are still trying to figure out, does the math work for them to do it? But, I find myself quoting you quite often on this. What did you mean by that?
I'm glad that you're quoting me. That's lovely. So let's start with, I lived through the .com. Okay, I owned my first house in 1986. Okay, so I lived through the 80s and the late 80s and the beginning of the 90s, the Reagan era. I lived through the .com bust. I lived through the Great Recession. So as an investor, I have seen 3 very large, to me, cycles that were meaningful to my portfolio and meaningful to the economy of the United States as a whole. Okay, so let's start there. I have also invested in my own, condo conversion, condo tels, in-state. Okay, I've invested in a lot of different places. What I've noticed is I'm not always right. And what I've noticed is that the economy doesn't always go up. So what I've done, and this is why it's my idiot policy, is I've taken a chunk of my wealth and I have put it in a whole life insurance policy that's focused on my capacity to borrow against it. So now I'm getting multiple use out of the same dollar. I've got a whole life insurance policy that is offering me dividends that is growing based on its insurance benefits. And I'm able to borrow against it to put into my own use on direct ownership or LP investments, right? So now I have $1 doing two jobs. And in case I'm an idiot and I completely frick up my own investment portfolio, my daughter's still going to inherit. Period. That life insurance policy allows me to go outside. Okay, assuming your fees are non-deductible for most investors, how much are fees? So I'd let you ask that question in a minute. But the point is that it's my idiot policy. And that's why I call it an idiot policy. I've lived through 3 big ups and downs. I've gone from over $3 million down to almost $1 million or less in a single cycle. I've lost a good chunk of money in a very short period of time. And it's not just me, it's the economy. It's not just my mistakes, it's other movements as well. So therefore, I have an idiot policy. My daughter's inheriting, whether I'm smart or not. And my granddaughter or my grandchildren are inheriting, whether my daughter's smart or not, because I've already paid now for a life insurance policy on her that is a whole life policy that will cash out at her death. And she can take a loan against it, but she can never take a loan against the whole policy. There will still always be assets available to the next generation.
Oh, I love that. I love that. All right, Christina, we just have a couple minutes left. Can we do a quick rapid fire here with the last couple questions here?
Okay, I'll do my best. What is it?
Okay, I assume your fees are non-deductible for most investors, right? How much are your fees? Now,
Yeah, go ahead.
I was gonna say they should schedule a call with you because you demonstrated a lot of value, but you got to figure out what value she demonstrates for you. Like it's an investment. I don't know.
It is. If you're a real estate professional, then absolutely my fees are deductible as an expense. Or if you do own assets, you can put the asset against that particular, my fees against that particular asset that I'm advising on. So I've advised on a large variety of portfolios, anywhere from, small portfolios up to $50 million funds. So I work inside of that whole range pretty easily. I have individuals with $50,000 or $20 million all the way down to less than 200,000. So yeah, and then my fee is based upon the work that we need to do in your complexity of your portfolio. So I'm not going to tell you my fees, but I am going to repeat what Whitney said, which is call me. I don't bite. I even take showers most mornings. Come on. Right? Like we can have a very upfront hour-long conversation about what your portfolio's needs are and what your needs are for your financial leadership in your life.
Awesome. Does your practice include estate planning?
Yes, I do. I do refer you to a lawyer, but our conversations include estate planning and what the purpose of estate planning is. And then we draft what we believe we want you to have. And then we take that to an estate lawyer.
Awesome. Guys, thank you so much for staying on here today. Almost everybody stayed the full time. That's amazing. Christina, one last time,
Yeah.
how can people find out about you?
Okay. Just for you guys. Are you ready? Okay. Get out pen and paper. My phone number, 310-463-5942. Check me out on ChristinaSuter.com. Check me out on my reels, on my Instagram, on my Facebook page. Check me out. But if you want to actually just have a phone call, my phone number, 310-463-5942. Give me a call. We'll talk for an hour for free about what your life's purpose is and what your investing portfolio serves.
Awesome. Christina, thank you so much for joining us here today. Guys, I always get the question, is this being recorded? Yes, it is being recorded. It will be posted to our YouTube page within 48 hours, and you will get a follow-up email with the recording. Christina, again, thank you so much for joining us here today. And guys, we will see you next week.
Thank you, Whitney. So appreciate it. PassiveInvesting.com. Love you guys.
Thank you. All right, guys. Thank you for being here, investing in yourself. We will check you out next time.